Tyler, it's time for you to just do it here. And one thing I asked Tyler to do today is bring a couple of different trade setups to us. You know, we have so much fun on the nightly shows where Mark hosts it. We have two coaches come in and they do that trade masters battle here. This is not that. This is different because Tyler actually is going to submit a couple of trade ideas to both Matt and I, and we're just going to judge them and let you know which one we like the best.
Jury, and executioner. We're going old school here.
That's exactly right. Tyler, what you got?
This is 15th century.
Listen, I'm not scared. All right. I'm going to leave with my head intact. It's going to be fine. It's going to be fine. Look, we got some nice buy to dip setups. So I had my pick of the litter. I want to find something that is at a support level that we like longer term, that potentially has some good premium so I can sell some puts. So I went and looked at FCX, Freeport, McMorran. This has been a juggernaut. Dips have been buys almost the entire last year. I've got earnings out of the way. And by the way, I mean, as far as an earnings confirming and supporting price rise, take a look at this. 34-cent loss, 3-cent gain, 22-cent gain, 48-cent gain. There's a reason why this stock price has recovered so much. It's not completely on fluff. You have had a fundamental improvement in the earnings. So you've got that to back you up. This went crazy on that breakout over 25.50, and many spectators have been just complaining and moaning. Oh my gosh, I missed it. Well, looky. You got to pull back right back to the scene of the crime here, testing that old breakout level. You're sitting on the 50-day moving average. Yeah, you've had a little bit of volume come in on this sell-off, but prices percentage-wise have pulled back from the high 26. Well, you were at 25 earlier today. So percentage-wise, you got about a 23% retracement. Okay, and so you've got some of the red hotness has cooled. You now get a dip buy. So what I was looking at, because of the aggressiveness of the sell-off, I don't know how quickly it's going to bounce back. What I do know is I can get pretty far out of the money with a naked put. So it's also a cheap stock. So I was looking out to March, and I was looking at maybe the March.
You're going deep.
I'll go pretty far out there. Yeah, I'll go March 15 delta and get 55 cents. Your margin requirement's $200. You got about a 25% ROI. And if you get assigned a stock, you're going to be long around $20.5. I feel like that's decent. That gives you a decent margin of error if you think FCX ultimately works its way higher.
Okay. So do we judge this one now, or do we have him submit the second one and then we can talk about both of them? Because
let's just talk about the setup. Okay, so we got a stock that's 23% off the highs. You're trying to kiss off the 50-day moving average. You got a hammer candle there. If you guys will remember, when we were talking about this breakout in FCX, we were a little bit concerned about the breakout and if the breakout could maintain if copper didn't join the party, right? And so if you'll remember that, copper really never joined that party. It just kind of stagnated. It hasn't showed weakness. It hasn't showed strength. It's just kind of been block. It's just been there, right? And so now you're basically at the exact same price threshold you were before FCX broke out on nothing, before copper did not join that party, and now you're at the exact same price threshold that you were before that. I still maintain any directional position here on FCX. I think you got to be looking at HG as well to make sure HG is supporting that technical directional movement, and I'm not sure it does yet. And so if Tyler was going to go to a directional play here, I was going to be a little concerned, not a lot, because I actually do see this as a potential directional play, especially if copper starts joining the party here. If copper joins the party, we should all be looking directional on FCX, period, end of sentence. But we haven't seen it yet. So I'm glad he went to the cash flow side of it. I'm glad he went to that cash flow to say, okay, I like the fact that it's a stock I like little bit of an overreaction to a positive earnings report. This does fit one of those examples, Tyler. I wouldn't exactly say FCX was a blowout earnings report last quarter, but it wasn't exactly, it was more, you just didn't show me enough, right? Like you showed me a lot, you just didn't show me enough to justify a stock that's went from 17.5 to 32 in the last quarter, right? I mean, you came in at 38 cents a share versus the expectation 39. You came in at 4.5 billion versus a 4.3 billion on expectation. Revenue was up 15% year over year. Good, solid numbers. And if FCX was up 8% in the quarter, I'd be like, yeah, we're good. Let's rock. FCX was up from 17.5 to 32 in the quarter. You got to show me a little bit something better than that. So obviously a little bit of a sell those numbers type of moment. Now you're overextended to the downside, clinging on to support. I do think there's a directional play here. I just think you got to be patient to let that set up. And I think you got to wait for copper to join that party too. So I like the naked put here. You're getting what, about 25% return on a 15 delta with 53 days?
Yep.
I mean, those numbers are great. Those numbers are fantastic. The only question that I have is, lastly, do you want to acquire at 15?
At 20?
Oh,
15
you saw,
delta.
okay.
15 delta.
Yeah, 15 delta. Because I was going to say 15. That seems like deep. At 20, we did the 20 or the 21. Was it the 20 or 21?
It was the 21 strike, but you're getting put
21
around 20
strike,
and a half,
which is slightly north of that $20 significant whole number. Yeah, I'm good on it.
Mind you, you're getting it like 35% off the high, right? So if you like this longer term for the economic rebound thing, I don't think it's bad.
Which I do, which I do, and it's a company I do believe in. If you don't own it already, yeah, I do like the naked put at 20. I do like getting it above 20. Like 21 sounds good too. So I'm interested. Yeah, I'm interested. I'm just interested in a second trade too.
Naked puts on FCX pullbacks where I can get good credits at locations I'd feel comfortable writing calls against.
This is when you want to sell that naked put too. Like you want to sell, like when it's off 23% off the highs, you're getting that pretty deep.
Little bit better premium too on the volatility. So yeah. Okay, Ty, what you got second? Let's see if
all right, I'm
it
interested.
stacks up against FCX.
All right, I got to tell you, I don't know how excited I am about buying the dip in the market the first day. So I'm going to hedge myself on some of these and say, I can't find anything bearish, even though the market's nasty today. I couldn't find anything bearish. And so on some of these, I would just say, I kind of want to, I'm being patient on many of these. And I'm trying to decide, I got a couple ones in mind, but I'm trying to decide which one I want to do.
Give me the names. Let me pick.
Disney's one of them.
Okay.
Exxon.
So we got a Disney versus Exxon showdown.
Yeah, let's do those two.
Okay, so Disney versus Exxon.
Exxon's got earnings coming up.
You got earnings on Exxon coming up real tight on the 1st, so you're less than a week away.
And this would be a trade you'd have to hold in earnings in both of these cases.
Okay.
You're going to be holding
so you're holding through earnings on both?
Yes.
ExxonMobil's earnings are going to be nasty. You already know that.
Yep.
But the market already knows that too.
Yep.
Like that's not anything that the market doesn't already know. Correct. Disney, I think, has a little bit more. You got to show me something here, Disney. There's been a lot of speculation in Disney over the last quarter that we haven't seen actually produce anything yet. It's like Disney's going to do this, they're going to do this, and they're going to do that, and let's shoot that stock up 35%, right?
Yeah.
So I do think Disney has a little bit more of a, hey, you got to show me something, whereas Exxon's got a little bit of just make sure you're breathing.
You want Exxon then?
I'm more interested in the Exxon setup that you're going to pitch us. So yeah, I want to hear it.
Okay, let's go Exxon.
I think Disney's a tougher analysis.
Yeah, I do too. Yeah.
Okay, so with Exxon, all these energy stocks obviously have a pullback. I like the relative strength today, right? This is the first sector they came after to buy the dip on, which again just reminds me that dip buyers are still willing to play in this space. So I like naked puts because it's a cheap stock. And again, because the market seems to be showing some weakness here, I'm now going to favor cash flow over directional because I feel like some of the momentum in the market is waning, right? So in a situation like that, I favor less directional plays where I'm not going to get punished if the market doesn't have a massive snapback, right? I'd like to pull back to the 20, undercut this morning, popped back. We could quibble over whether you want to wait for it to go above today's high or what you want to do with the trigger. But here, the trade idea for me is going to be selling an out of the money put down around 37.50. Got to go to March because Feb's just a little close at this juncture. I'll also point out that the earnings reactions haven't been that bad for the last couple of quarters. And so like we talked about in the Trading Justice podcast, you look at the history of earnings and how the stock reacts, that gives you an idea of what to expect. I don't expect much on this earnings announcement anyways, which is how I'm justifying holding a trade into it. The numbers are pretty good though when you look at the premium available. If I go out to March, the 37.50 strike, it's got a 12 delta. You're going to get, let's be generous and say you get 60 cents, keep the math easy. They're going to make me put up 373. So about I don't know what that is percentage wise, but by naked put standards,
16%.
16%. Yeah, 16%.
Ah, look at that.
Yeah, nice, Tim. Good on the math. And you got an 88% probability. Look, if you get assigned, if you're willing to take assignment, you're now long Exxon with the 60 cents. You're long Exxon less than $37. Your dividend yield at that point, right now it's a 7.5% dividend, but you're not getting it at the current price. You're getting it cheaper. So you're getting 87 cents in dividend every 4 quarters. You're getting $3.50 in dividends, assuming they don't cut it. You only had to pay around $37 for the stock. You're also getting it at a dividend yield of about 9.5% if it gets down there.
Mm-hmm.
So that's the play.
Okay. Well, technically, obviously, you've got a nice pattern developing in energy. It's correlated so much to what's happening in an XLE in that regard. But really, with an earnings announcement coming up here, the technicals don't really matter on this. Past earnings gaps, like we talked about in the podcast, Exxon's not a crazy gapper. I mean, what is the market expectation on the move here going to be really next week when we get the number? Probably $2, $3, $4, you know, I guess at the most probably, because I'm looking at the at the money straddle, $2, $3, something like that.
Yeah, I'd say $2.
So you're only going to get like 5% movement on earnings. 37 is below the 200, is down at deeper locations. If you're approaching this as an investor, thinking about adding something that you would want for dividend payments, I'm open to this. I think I know where I'm leaning on which one I like, but I want to hear Matt's thoughts first.
And again, we don't know what the market maker move is going to be right now, but when you're looking at those options, and what day does Exxon report?
They report next Friday, I'm sure.
Yeah,
2-3.
So it's
Feb second pre-market.
What is that? 9 days?
Mm-hmm.
Is that 9 days?
Yeah, them and Chevron always report together. So, I think it's Friday.
It's 6 days.
It's 6 days. Yeah. Okay. So it's within the 9-day contract though in the options market,
yes,
correct?
Yes.
Okay.
Yes.
So when you're looking at the at the money strata right now in that market, you're talking about somewhere around $3. When you look at the 2-day the front option there, you're about $1.50.
Mm-hmm.
When you're looking at that, there's no way the market maker move is going to be above $2 on Exxon next week.
Mm-hmm.
And so and also when you're talking about Exxon, a $4 market maker move would be a 10% expectation in Exxon. Just not going to happen. It's Exxon Mobil that pays an 8% dividend. Not going to happen. So I do think you got that the storyline developed where, you know, Exxon might have a little bit of volatility because Exxon's done amazing from a price action perspective in the last quarter. We do expect negative earnings numbers, but again, the market knows this very well. And so even though Exxon's done really well in the last quarter, in the last 2 quarters, it's up like 5%, right? So it gives you a little bit of a different feeling from an overvalued perspective. We're not talking about a stock that is like Tesla, up 100% in the last quarter, up 600% in the last year, right? You're talking about mixed data here from a technical perspective in Exxon. You could do far worse in your life than picking up a good little cash flow on a company like Exxon, getting paid a 9% dividend if it ever gets put to you, and writing covered calls that you can cash flow 2% against. You can do far worse in life than that.
Yeah, I agree. So which one? Judge,
If I had to pick,
jury, executioner, Freeport
FCX
Mac
versus Exxon?
or Exxon?
Honestly, if you're looking for the cash flow side of this, I like Exxon more. I do. I like Exxon more. I like FCX more from a patience, be a little patient while we see this battle at the 50-day moving average. I do think you could have a directional movement on FCX coming up fairly soon. And so I'd probably shy away from the cash flow side of it to see if that directional side sets up. Because if copper breaks out, you're going to want FCX from a directional perspective. And so if you already got naked puts on it, are you really going to leverage up on that with the swing trade too? I don't think so. I think the better cash flow side of it's Exxon, that dividend sitting in place, you're getting it toward the lows there. I like the cash flow side on Exxon. I'd be patient on the directional movement on FCX if copper breaks out.
Digging deep into the naked put well here, Tyler, to come up with some ideas on, because probably just from the market conditions today, you're like, okay, I don't want to think directional. I'm going to try to find something. Both reasonable candidates. I love FCX on my watch list, right? Obviously it's been a great stock for a long time for a lot of people. I think Matt's analysis around the copper consolidation, you could be patient on FCX. I think just timing wise, I would love to see this FCX set up maybe in a couple days or
quite frankly, a lot of people are already in FCX in some capacity, right? I mean, it's been one of those stocks we've done cover calls at tackle trading on for 6 years. So a lot of people are already invested in FCX. Not a lot of people right now are invested in any energy plays.
On a day where the craziness out there is happening the way it is, give me an old company that's been around for 110 years at lower levels that will give me a 10% dividend if I have to buy it. I'm with Matt. I'm on Exxon Mobil here.
I'm on Exxon.
Yeah. Tyler, is that what you thought was going to happen?
Look, I just knew you guys. I agree with all the logic and all the rationale. But I'd probably go. I mean, Exxon is a slower mover, right? So I think it also depends on maybe your preference. If you want something that moves a little bit more, FCX has got a little more firepower. So I like them both. I mean, I don't know that I favor one over the other, but I agree with all the rationale you guys have laid out.